and I
Got
thought
it.
that this could be informative. Yeah.
Got it. So it's good to know I'm not the only one who's not experienced here.
I think that's what the Anshul is starting this for.
Sure,
Uh,
perfect. It's good.
yeah.
Yeah, sorry. I'm saying we're all connected now. I think we've given ample enough time for people to join. So we're the four people. We'll begin. I'd request you all to, keep yourself on mute till the time this session is there. We'll have a 15-minute Q&A later, and hopefully this is going to be recorded in its entirety with good quality visuals and audio. So just to start, give me a second. Yeah. So just to start, just to give you a basic introduction on any kind of investment method. So let's say how many types of traders are there? So there is somebody who day trades, buys or sells the same day and exits his position and books the profit or books the loss. So that's one type of trader, and that's a very fast paced, high decision making, and too many touch points in the market. Another one would be, as you all know, somebody who buys shares and forgets about it for 5 years, 2 years, 1 year, or whenever their profit target is met. They exit then. And some people never sell shares. So some people say Tata Motor will touch 10,000 in the next 100 years. So they're never going to sell, with a nationalistic feeling or something like we don't want to take too much stress. We just want to hold and forget, which is basically the scenario and narrative around crypto at the moment. The second one would be somebody called positional traders and swing traders. They would be people who have a horizon of, let's say, a couple of weeks going stretching up to a few months, 3 months, 6 months. And they generally they use fundamental analysis. Fundamental analysis would be the company finances, if the company is profitable quarter by quarter, and the future projections look nice, and they feel the company is going to do great. Guys, give me another second. There is someone else who has joined. I will also put them on the link. Sorry about that break, guys. Okay. So the thing is, if when somebody talks about investing and trading and all of that, so basically the idea for everybody is to make money. Nobody is here to, just learn it and provide information or be a professor around it, to be an academic around it. Okay. Everybody wants to make money. And from my experience, I've been in this for, let's say 3 years. And I've lost a lot of money. I've made a lot of money, and I've found a way to consistently make money now. And one of the ways to do it is, I believe, guys, can you just acknowledge if you can see my screen at the moment?
Yes, Anshul, we can.
Great, great. So let's say I'll pick any of these shares. By the way, hi Vishal. Can you see the screen? Can you hear me?
Yeah, yeah, I can.
Great.
I
So we'll get in touch later by the end of the session, and please have your
sure.
question and answers, at the end.
Yeah,
So
yeah, yeah.
let's say we pick any of these shares. I say let's pick Tata Chemical. Okay. So Tata Chemical, the way you can visualize this is either based on bars, either based on candles. So this is one of the most famous platforms called Trading View. I have an account here. It gives you free services, and you can look at the price action. You can look at where the market is, where the market was, and basically it gives you historic information. So all the way back to 2015. If I really want to go back, I can keep going back. So most of you would be aware of this platform. If not, this is something that I use, and it's been very profitable for me, and it's provides very clear information of where the market is heading. So we have bars, candlestick, line. So line's gonna look like this. So from my experience, I've seen candlestick patterns are the best. And second thing, I would say why they are the best, and the reason I would always suggest anyone starting out or even somebody who's professional to start with candlestick patterns and not line patterns. So if you start with lines, you can see, you can know where the market went and you can know where the pullback was, like profit booking or some sellers getting active. So it came down, went up again, came down, which was a higher low than the previous low, which is proving that the market would be in an uptrend and continue to do so. And that is exactly what it did until it went sideways and broke the previous low. So this is something called a Dow Jones theory, where higher highs and higher lows are made, and this proves to an investor or a trader or anyone that market will continue to do so. Obviously, market can act erratic. There are always war-like scenarios like Russia, Ukraine, or any new developments like coronavirus happening or anything bad news for the entire world. So market can crash, people can lose trust in the market, and obviously the company can also perform badly wherever you're investing. So here what's happening is you don't really get a very good idea. It's too smooth, too let's say very simplistic. But day trading or even swing trading, where you're buying and holding for 3 months, can be quite complex. So I'll tell you why candlesticks are different than line charts is because you have the length of the candle and you have these according to the time frames. So each candle, if I have a 5 minute time frame set, so each candle represents the price action that has taken place in the last 5 minutes of that particular candle. So this is a 5 minute candle. So if you can see here, there is a time 9:15, right at the bottom 9:20, 9:25, all the way till the close of the day, which is 3:25. So typical day for trading, typical day for investing would be from 9:15 all the way to 3:15. But the market starts at 9, and there's a window for institutional investors to buy their shares. That's from 9 to 9:15 and 3:15 to 3:25. So they get that extra window is because they're the ones who are making the market. They're the ones who are pulling in the money, putting in the money, and they're a little more preferred by SEBI and than retail traders. So we're going to be investing, let's say, 50,000 rupees a day. That's nothing as compared to the institution investors, the big banks, the mutual fund houses, the hedge fund managers, and all of those big companies. So they get that extra window, and that is the reason we see the market has been in continuation here. Let's say, I know I'm jumping ahead of my time, but this is something very basic that almost everybody should know, according to me, is the market has gapped up. So this is a 9:15 candle. The reason why it gapped up is because at the start of the day, when market opened for institutions, not us, not retail investors, who are sitting at home with their laptops and a brokerage account. These are people who are managing banks and handling all the money that comes in for mutual fund. So they buy in a lot of quantity, bulk quantities. Okay. So I'll tell you exactly. There is a site called NSE Stock Exchange Live Market. This is something called a pre-market open. So if you go on National Stock Exchange India's official website, by 9/7, they would tell you 49 advances. That means market has gone up and one decline. So when market crashed after Vladimir Putin said he's going to invade Ukraine, market crashed. But the next day, if you had noticed, market jumped back up because there was panic selling. And some people thought, man, India doesn't have to do anything with this. Why are Indian shares going down? So this is a very good opportunity to buy because almost all the companies are doing pretty well. So why not I buy? So out of the Nifty 50, 49 plus 1, only 1 declined and 49 advanced. So if you can see the percentage change from yesterday in the 7 minutes, 9 to 9:07, 3%, 4%, almost as much as what FD gives you in 1 year. You could have gotten had you just bought, the day Russia invaded Ukraine. And Britannia was the only one that was sold. So this gives at 9/7 a very good sense where the market would be that day. The reason I show you this website NSE, you can have a stock screener, you can have your broker providing you this information or your bank giving you this information. But the reason I say this is because I found this to be pretty simple, pretty approachable, and a public service. So I don't have to pay for anything. I keep it very simple. And the more complex you make the day trading model or your strategy, the more your mind will run. And I can honestly tell you the market can only go two ways. Either it's going to go up or it's going to go down. The candles are not going to come out of the screen and hit your nose. There is no way for the candles to do that. So if it's only going to go up, if it's only going to go down, it's like a coin toss. So you got to keep it as simple as possible. One thing I'd say, and in the next sessions, I would try to dig deeper into the trading psychology, why people lose money, why people think it's hard, why people there's a lot of misconception around trading, investing. People want to really jump into cryptos, but I'd say the same people, like I was mentioning to Rishabh earlier, the same people who buy stocks, shares, natural gas, gold, virtual gold, commodities, are the same people who have the money to buy cryptos. So I don't know if it's available here, but if I show you CRYP, Bitcoin, sorry, Bitcoin, Bitcoin tracker, okay? It also went 9% up, and the candles are very similar. Higher highs, higher low, lower lows then, and then market going sideways. And that's a 5-minute candle. All the candles will look, this is crypto, Bitcoin tracker 1XBT, okay? And if I go to Britannia, which is an Indian company and the listed share on NSE, it also moves quite the same way. However, Bitcoin is not going to be as clean. It's going to be gap up, gap down, is because there are not that efficient exchanges that can visualize the data for you at a minute to minute basis, because not a lot of people are investing. The people who invest can purchase really high and take the market really high and create gaps. So I consider such gaps as inefficiencies in the market, and the market has to fill these gaps because market cannot be incongruent. Usually 99.9% of the gaps do get filled in the next 1 week or 2 weeks maximum. So whenever there is a gap made in the market, like for example, Britannia, let's say, was the only share on NSC which had sold and gapped down when the market was going up. So Britannia gapped down just a little. If you can see, Britannia gapped down around 0.32%. So right from the close of this candle, Britannia came here, and you can see, even though it went down, the gap was filled right here. The gap was filled, and the moment the gap was filled once, twice, market went sideways, market went down. So this is also a trading strategy called gap theory. You can make a note of this in somewhere and read about it in your own time. But to keep it very simple, gap theory says that few bunch of people with a large amount of money and large quantities either believed in the market or didn't believe. In this case, they said, we don't want to keep shares of Britannia. We don't want to stay invested during a wartime. Maybe because the price is already too high, it has to correct. So some people who had a lot of money who were holding it, they sold it, but the gap had to be filled. So the entire market yesterday was long and moving upside. So that's why in the rally, it made sense for short sellers to go long, because the gap will be filled. And what a better day than the day when entire Nifty, entire Sensex is going up, right? So that was one of the reasons. And so it might not happen the same day. The gap might not get filled the same day, but it will eventually, right? So going back to why I would say candlestick is better than line charts, bar charts, is because if I show you the anatomy of a candlestick, so I think you would know that a green candlestick means market is going up. The market is upward motion. Red candle means market is going down. But what does these smaller lines, shadow-like tails, and the close of the candle, why is this colored and why is this a line? So to put it very simply, in a 5-minute time frame, if this is 5 minutes, this shows that price has moved from this particular price point. On your right, you can see the price here. So in this particular 5-minute candle, on this 120, let's say, if we just choose this candle, the price has moved from have a check here. Okay, this is the open, this is the high, this is the low, this is the close, and this is the percentage change for that particular candle. So this is where the market had opened. Right here, the market opened. 3414.9. It also says the same thing, 3414.8. You can check it on the right as well, and you can check it right here. This one would give you mechanical, accurate information. This is somewhere you'll have to put the cursor, it might be up or down, and you might end up making a mistake if you're not too accurate. So if you just place the cursor here, you can see the candle opened at 3414. The high it made was 3422, and the low it made was 3412. So the wick, wherever the wick is, these lines are called wicks, and the lowest point would be the low of the candle. The highest point of the wick would be the high of the candle. In this case, there is no high. The close of the candle is actually the high of the candle. And there is some significance for that as well. So if the candle closes and does not make a wick, that means right till the last second of the 5-minute candle, people were buying, which is a very good indication and another pattern of a specific bullish candle. So when I say bullish, that means market is going up. When I say bearish, the market is going down. Guys, give me a second. There's somebody on the door. I'll just take 30 seconds of your time. Guys, you don't mind giving me 1 minute? Hello?
Yeah, no problem, Anshul.
Yeah, I'll just be back.
Take it out, take it out.
Sorry about that, guys. I think on Saturday and Sunday, it'll be best to keep it super early or super late because the world is up. Okay. I'll just start again, moving on to the candlestick patterns. So please ask me if you have any doubts about the candlestick pattern. So this would be a bearish candle. The candle started here, right at the close of this candle. The candle started selling and went till here in the 5 minutes. However, there was buying pressure somewhere around, let's say, second or third minute, and the candle closed here. So red candle would mean It started selling here, it closed here. However, the entire range of price was here. So what would happen if you were long and you were thinking the price would go reverse from here and had your stop loss somewhere here, your stop losses would get cut right here. If you would have had your stop loss here, it would have been cut and then the market reversed back. So I would always suggest you do use stop losses to minimize your losses, but be careful when the entries of your positions are, and you have to have a very technical, sufficient stop loss. So I've explained why a candle is better. As per me, there are a lot of traders who would trade in bar charts, and they would like to understand the bars. That's the open of the bar. The price went here. That's the close of the bar, and the wicks very similar to candlestick. And but you have to choose your poison. My poison would be the candles, and I like the green and the red color. Very easy to differentiate if it's a buy or a sell, and very easy to know what the patterns are. It's easy to my eyes. That's why I use it. There's no hard and fast rule. Something I would also want to tell you is, as I mentioned earlier, there are different types of investors and traders, and people use time frames very differently. So, since I am more inclined towards investing and holding long term, especially with cryptos and others, and I don't want to trade in crypto because, like, our finance minister has mentioned that they will be 30% taxed on our profits, irrespective of our income slab. So, I would obviously want to hold cryptos with the residual income. But in shares, I occasionally, 70% of the time, I would day trade. I don't trade and hold for next week or next day, because it's a very dynamic market, especially with the pandemic. The bigger institution like WHO, UN, they can release any news and anything could happen overnight. Something happening in Europe can impact Indian shares. So I like to have that sense of certainty that my profits are protected with me, and whatever I've lost for that day, and it cannot maximize or minimize. I have a clear account at the end of the day. So that's what day trading gives me. But since it's a double-edged sword, I would also like to mention it that you do have clarity of how much money you've made or lost the same day, but it is very, very difficult to time the market in day trade, because here you would think market is going down, but then it went up. And if you were selling somewhere here, you would have lost a lot of money. How you could have lost a lot of money? Because somebody's saying, okay, Ukraine is under attack, almost feels like World War III. Yesterday, the market was selling. Britannia is selling in the first 15 minutes. Let me just sell Britannia shares, short sell it. So your broker allows you to short sell. And you short sell somewhere here and the market reverses. And since you're using margin money, so what is margin money? If you have 100 rupees in day trading, your broker gives you the power to trade. So your 100 rupee becomes 500 rupees. So your losses, if you make a loss, so on 100 rupee, if you make a 2% mistake, you lose 10%, the same multiplier effect, because you're using margin money. So let's say you sold here and the market reversed 2%, almost 2% against you, and you had to sell here, because that's where your stop loss was, the high of the day. So here the market started and you said, okay, I can't risk a lot of money, obviously. And you get spooked out. You don't use a stop loss and you say, okay, I'm going to exit my position now. I don't think the market is going in my direction. Entire day, Nifty is going up. All the shares are doing pretty well. And you sell here. So this 2% becomes 10% of your net worth. And that is basically 2 years of FD profits. And I know that it can be very, very devastating for a lot of people who have saved money and who require money to pay their bills, and who can't hold on to, who have a lot of large savings with them. So losing money from your savings can be very gut wrenching. I'll be honest and be transparent. I have blown up my account multiple times when I was starting to day trade, and I do believe some of the best day traders in the world don't learn unless they made such big mistakes and blew up their account. So that was a big learning lesson for me, that I have to be a discretionary, cautionary trader, always exiting positions, even if I have to suck it up, take a loss, and move on, and prepare my mind for that, and take this game as a probability game. It's not a game of short. You're going to make money every day of your life. No, You're going to have to work for it. Most of the traders have taken 5 to 10 years, day traders, I'm saying. Long term investments practically does not require the complex strategies a day trading strategy does. Because in day trading, there are big Wall Street people, Dalal Street people, computers, algorithms, preset hedge fund managers, and specific company finance departments like Britannia's finance department would not want Britannia to keep dipping. So the internal shares they also keep buying. So many different type of traders are buying and selling in a single day that it's very, very hard to predict the market and understand the trend. So my approach today would be to start from the basics. I'll dig down, take another 5 or 7 minutes to, take you through the basics, and we'll deep dive into the three basic strategies that I've been using initially in my day trading career and trading career, and I still use it because they work pretty well. And once a candle is formed, none of the trader, even if he is having large pockets like 10,000 crore or 1 lakh crore of money to invest in the market, even they would not want to mess up with the market because this is a historically candle for that particular day in that time has been made. It is written. You can't change it. You can't mess with it. It's like a ledger. It's formed, you know. So even with people a lot of money, they wouldn't want to mess with it because a lot of buyers and sellers are active at the close and ends of the candle. So if it's going buy, people would be very, very cautious to keep buying it here. So that's why you see the candles getting smaller and smaller. And right after this pullback would, I would say, why would you? So some of you would ask me a question like, since the market was selling continuously, okay, it reversed a bit, why would somebody sell here without having any indication? So I'll give you a very straight up answer. I have no idea why anybody would sell here, but I have an idea why someone would book profits. Okay. So if I say I make 10,000 rupees in 10 minutes, and I say that's a good amount of money I make, and I want to have that target set, preset. I don't know if the market can give me 50,000 that day or 5,000 or take 10,000 from me. I have to be happy with 10,000. So some people come with preconceived, preset targets in their mind. So if the market has rallied 1%, that is on margin, somewhere around 1.2, 1.28% in this rally, that could be somewhere around, and multiply by 5, should be around 6%, 6% plus. And that's the money you get from your FD investments each year. So I'd say I'm happy with 1% profits, man. And so that's why people will book profits. So all this buying, some people would be selling it, whatever they bought. So that's profit booking. But the moment a green candle is made, that eventually tells you that no, buyers are still active. This was not a sell by sellers. This was just a profit booking by the buyers. So this is something I got to know much later in my career, and I would keep making these silly mistakes. And my heart goes out to most of the retail traders because I've lost a fortune. I lost a lot of money in thinking that okay, since this candle was such a big red candle and this was such a huge big reversal rally, now the sellers are getting active and I can take this small rally back somewhere here, take a 0.8%, 4-5% I can make on my net worth and exit. It doesn't happen like that. It's too dynamic, and we don't know who's buying, who's selling. What if it's just a profit booking and sellers are not getting active? Sellers need to be sure that okay, let's take another red candle, let's take another red candle, and then sellers are going to sell again. So we have no idea why this is made, who made this, are they trying to manipulate the market? So some of the sellers enter, and then the sellers, there's a term called short squeeze. So every seller who's trying to sell gets squeezed by the big rallies of the green candle. Basically somebody just buying and taking the market higher and higher. So short sellers get squeezed. It's a very common phenomenon. And because when you short the market, you basically don't have any shares of Britannia. You're using your broker shares to short the market. You're selling the market first, and then you're going to buy it later. So if you sell the market, let's say your broker says I have some Britannia shares, and he allows you to short sell the market. uh, Guys, 1 second. I really hope that you guys are in the call, right? I hope it doesn't become like I'm just
Yes,
blabbering.
yes, yes.
Yes, totally with you, Anshu.
Yeah, we are.
My bad, my bad. Okay. So what happens is I have no idea if it's going to sell or not, but I have to be very, very sure. So this is one mistake I kept continuously making, thinking the bears are active now, the bulls have lost momentum, and the market can go down and go back again. I don't really care. So one thing I tell you is you don't have to know where the market is going to make money. A lot of people thought, no, man, I have to know where the trend is. I have to know what the market is doing today. I have to know what particular share is doing today. So if you could see on this list, guys, I have a whole lot of list of shares, all the way from Coal India, Ultra Cement, Bank Nifty, Hindustan Petroleum, Colgate Palmolive to PNB. I don't really care too much of which share I'm buying or selling in. I focus more on the patterns because, like in nature, patterns repeat themselves on a day to day basis because the people who are buying and selling are the same people who are buying and selling the next day and the day forward and in cryptos and in gold and in treasury bonds and anywhere, any other financial instruments. So psychology of the market would always be buyers and sellers. Don't think of institutions XYZ. Don't overcomplicate your mind. There are only bunch of buyers, only bunch of sellers, and your job is to clearly predict if the buyer is in control or the seller is in control. And you have to be in the swing. Wherever the buyer takes you, you book your profit, which is satisfactory to you. And if you're shorting, wherever the sellers takes you, and when you start seeing weakness in your type of trading, like if sellers are active and you're short, and you start seeing weakness and if they're booking profits or if the buyers are getting active, you have to exit there and then. So day trading is a very fast paced job. A lot of people, wake up feeling a little dizzy, don't work out too much, and the minds are not that active. So I wouldn't recommend anyone who doesn't stay in shape, doesn't take care of themselves on a day-to-day basis, and don't feel too motivated or feel too alert to ever day trade. Day trade is a very fast. You could lose all your fortune in a matter of seconds. I have blown my account multiple times, but if you know how to do this, I don't think you'll have to work a single day of your life for anyone else. So that's what the power of this is. But with that being said, I'd say that the market is designed to take your money. It's not designed to make you rich. It's not designed to give you the life that you envision for yourself. It is designed to take everything from you and give it to the rich. So you got to be very, very careful. The next thing would be I want to talk about is time frames. Like I mentioned, for day trading, a 5 minute time frame works for me. A 10 minute, 15 minute definitely works for me. But if you're going to be investing long term, guys, so go in a day's time frame, and here all of these candles are 1 day price action. So for 7th February, if you can see now, there's no time. There are dates: 7th February, 8th February, 9th February, 10th February. These are what the price of this particular share was on that day. Okay. So the price started here, went down here. Next day, price went up. Next day, price went down. And there's a lot of money to be made between these ranges. So if an FD gives you 5% a year, just this rally, if you would bought here, for example, you would have made 2.38% multiplied by 5 because you use margin money. You would have made somewhere around 11.5%, my friends. And 11.5% definitely is HDFC Bank's 2 years of FD returns, which is pretty good. And you made this in 3 days. So 700 and plus days versus 3 days of hard work. But it can also go against you. So what if somebody buys here, the market goes down and your stop losses get cut? So your 2 years of FD profits are gone in 3 days as well. So it's a double-edged sword. A lot of money can be made. And most of the YouTube gurus and everyone, they'll tell you so that you get excited and motivated and want to try this and lose all your money and whatnot, because they just have to sell their courses. So they will say so much money can be made. We've made so much money for our people who listen to our advices and whatnot. But it's a double-edged sword. You never know what the market is going to do. I never know what the market is going to do. I had no idea that the market, for example, here is going to keep going up. What if it would have reversed from here? Looking at this candle pattern, exact same price point, it should have reversed. It didn't. It reversed from here. And you can't keep holding till here thinking, it might reverse from some place. It might never reverse. It might never come back to your price point in the next 5 years. And the more you hold, the more money you lose. And at some point, your broker is going to give you a margin call and say, "Sir, you've lost 1 crore and we can't give you more money. And now we're filing a case on you. We need to recover our money and you have to sell your house," or something like that. So cut your losses when it going against you. Is the reason I'm giving you this advice is we never know what the market is doing. We never know where it is going to go, which direction it's going to end up that day, tomorrow, day after tomorrow. If China is going to attack Taiwan, if China is going to play games with Arunachal, if US is going to play games with Iran, we have no idea. Macroeconomic factors, presidents dying, assassination attempts, anything, Godra riots, anything, railway track derailing, rails derailing from the track, anything could have an impact on the market. So I would always say, have a target in your mind. This is the money I want to make. The moment I make it, I'm not going to be greedy. And this is the money I can lose. And I'm not going to be sloth like. So there are one few of 7 sins. Okay. 2 sins are repeatable in the market. One is greed, not booking your profits on time, and one is fear. And selling too early, saying, "Oh my God, market is going to reverse against us." Market, builds on your fear. Every time you want to feel market is going against me, "Oh my God, I should sell." So a lot of people sold when Russia attacked Ukraine. No man, wartime, let's just sell everything. And then next day, those are the same people who are buying, and they sell lower and they buy higher. So in between, they've lost a lot of money. And a lot of innocent retail investors make this mistake. Okay. So coming back to day, there are different time frames for a day: 5 minutes, 15 minutes. You have to decide what kind of trader you want to be and what kind of time frame you want to be in. So my suggestion, if you are buying shares, holding long term, look at days chart, look at 1 week time frame. So one candle would show you price action for a week. And if you want to hold shares, buy shares and hold it for next 10 years, 15 years, look at one day, 1 week, and 1 month. So you'll understand at what prices the market is selling and what prices institutions are buying. One little tweak, if I give you, it's a very interesting take, which I learned very early in my career, but very hard to master, is dynamic pivot points. You know what? Let's keep it let's keep it for the next 5-10 minutes. We'll talk about these pivot points, but just a little brief would be, there are prices where the market starts to bounce off. So if you see market went up, came all the way down and bounced back from this point. So what I'll do in my mind is I'll make a line here. Okay. These, all of these candles are not made yet. Okay. This is happening real time. Think about it this way. So if the market went up, came down and jumped up here, I'm going to make one here, one line here. Okay. Then the market came down here and jumped again from the same price point, somewhere around that. Obviously, markets are not going to be that clean and they are made to manipulate you, manipulate your decisions and cut your stop losses. So it went down a bit, but when it reversed higher. Okay. So it cut the stop losses on both ends, here and here, for both of them. But if you were aware of this price point and if you were active thinking, okay, market can go below also, but if there is buying pressure, I'm going to buy somewhere here and I'm going to wait it out. So in a week's time or 2 weeks time, you could have made 9 into 5, let's say 10%. Okay. 10% into 5, 50% of your capital. If you would have invested 10 lakh rupees, you would have made 15 lakhs by the end of 3 weeks. So 5 lakh rupees you would have made in 21 days if you knew where to buy, where to sell. If you were investing, let's say 1 lakh rupees, just 1 lakh, you would have made 50,000 in 21 days. And short. And this price is again tested here. You would have made money again and again and again. And I'm expecting green candle and again. So these are the pivot points where you have to be very, very aware of where the market are bouncing back up from. And the reason they bounce back, guys, I would say, is because earlier when there were no computers, the way to do trading was you would call your broker and place your trade. So you would call Mr. X and say, buy 1 lakh shares of Britannia for me and sell them when they reach 10% higher. So you would sell that. But now we have computers. Now we don't have to get in touch with the broker over call, and you can just type your codes and the computer is going to do your job for you. So the with time, algorithms started working, computers started coming in, machine learning got better, and that's why we see sharp actions. Buying, selling, unless the institutions or the bankers or the company is doing really well, or somewhere around this time, the quarterly results have outperformed the market, then the prices will definitely go up because people will believe, man, it's going to go completely up. And I think somewhere around this time, August is the third quarter results for these companies, FMCG and whatnot. So that's about different schools of traders. You can be a swing trader, hold on for weeks, or you could be a day trader like myself and trade on the day and be okay with it. I don't personally like to sleep with uncertainty that I don't know what's going to happen to my money tomorrow. I don't like to keep my positions open for a long time. I personally feel it gives me a bit of anxiety and I don't want to keep checking my phone with it. So I want to be completely in control for what I do. And if I make a mistake, I get out of it. But obviously, with that being said, I'll give you a statistics that 5% of all day traders are profitable. 95% of all day traders lose money. And somewhere around 40% of long-term investors make money and 60% lose money, obviously, because most of the newbies are also investing, but the majority of people make money in long term.
That was I was about to say. It's like anxiety comes with a price.
Yep. A lot of anxiety, I'd say, because so we've had Mayank going, Vishal's here, and yeah, guys, definitely there's anxiety, definitely there's controlling your emotions, and being
Also, Anshul, like, how do you handle this? Like, there's this always this fear of missing out. It's like you are not taking that part, and you're saying that okay, it is performing well, and you didn't do it because you were feeling that you were cautious and you won't go into that thing. But it just exploded. Like, I'll give you an example. It's like just a second. Let me like open my. So can you like check a company called SEL Electronics? SEL Electronics. SELMC. It's the code SELMC. Yes, yes, yes.
yeah,
Just look at it.
yeah. So price has just been going up and up and up, right?
Yeah, I was like, what the fuck is going on here?
Right. I understand. So the thing is, uh, you've identified a very good share, and it's definitely going one directional. Uh, so the thing is, how to not have fear of missing out, right? Is
Yeah, it's like, and
so
I've been watching this share since it was like 0.35 paise, and it's
yep,
somewhere.
right. So I'll tell you what usually happens is when we look at anything, we have in our mind an idea. Uh, we have these experiences like SCLMC. If I would have taken it at 5 rupees, man, it has just
Yeah,
given me a
exactly.
fortune. And but these are once in a lifetime comet like situations. You have to train your mind in believing that not all opportunities will look like this. And
Yeah, but
okay, but the thing is, in crypto and everywhere, you don't know when the next crash is. You don't
yeah,
know if the promoters are artificially building the price up.
same. When I like saw the breakup of the company, it was 75% of money was of the promoters.
Exactly. So you can
Okay,
never be sure.
on a 3 crore valuation of the company, 75% of the money is of the promoters. So it can go sideways at any time.
Exactly. So think about it this way. If you put 1 crore in this, which is one third of the company's market cap,
Yeah,
do you think the promoters would not know that it's not their money?
yeah, exactly.
Right? So 3 करोड़ की कंपनी अगर 4 करोड़ की हो जाती है, the
हाँ,
promoters are going to know, भाई मैंने अब तक आर्टिफिशियली बढ़ाया,
हाँ,
एक मुर्गा फंस चुका है जिसने 1 करोड़ डाल दिया
yeah,
है।
exactly.
अब हम वो होल्ड करेगा ये सोच के कि प्राइस ऊपर जाएगा, अब हम सारे शेयर्स बेचते हैं।
Yes.
तो वो आपके 1 करोड़ भी खा लेगा और आप डर के
हाँ,
मारे, क्योंकि 1 करोड़ पे लॉसेस बहुत हैवी होंगे, सो यू विल ऑल्सो एग्जिट योर पोजिशंस.
yes.
One can never know. And these are the particular companies that look very rosy, very clear.
Yeah, exactly. Yes, that's why I told you the name of this company, right?
So how to not get FOMO is to by, let's say, educating yourself, knowing which is a real company, what's the market cap. If a market cap, it's say 10,000 crore, nobody can mess with that company, dude.
Yeah, exactly. Yes.
A big large cap organization where they're handling their management and the business processes very very nicely. That's why they've reached where they are. This is a 3 crore company. I could
Yeah.
say my net worth is as much as this company, let's
Huh,
say.
I know. That's why. But like, if somebody sees this chart and he's like, he comes across the BSCA code and he just like puts it on the Google and he says, okay, 0.35 rupees, and then it's just going up and 121 rupees, and he's like, okay, I'll put my money into it. But like, if we are booking smaller profits from these companies like this, suppose that like there's a person that wants to book a smaller profits, not people like us, but people who want to book smaller profits of, for around say a lakh or two.
Yeah.
Would it work for them for a day or two or three?
It would definitely work. It would definitely work. But I would also say do it very discretionary. Don't put
Yeah.
all your money in, this one.
Yes, exactly.
Spread it out because you never know when markets reverse. You never know because they have these computers which know how large positions you have, and they
Yes,
have much more money than you to reverse it. And when the
yes.
market starts going against you and you're using margin money, you will
Mm.
at some point exit. You will at some point say, man, I've burnt a lot of money. And that's when they start reversing it again, when you've exited.
Oh, oh,
So
okay.
I will always suggest there's a lot of money that can be made from Nifty 500, somewhere like
Okay.
Asian Paints, all of these companies as well.
Mm.
Because what you need is not random big rewards like 2 lakh bana liye, 5 crore.
Yeah, yeah.
You need consistency of
Consistent rewards. Yeah.
exactly, because that's how you can sustain your lifestyle. Think about it this way: in a year, if I give you 5 lakh rupees, and
Yeah.
then entire year you don't have any money, so the moment human beings get 5 lakh, they're gonna spend 4 lakhs, saying,
Yeah.
"Oh, I might find another one of those opportunities," because the mind is optimistic. But if
Yes.
I consistently keep giving you 50,000 a year month, at the end of the year, you will have 6 lakh rupees, and your chadar of kharcha would be lower. So you're going to be doing an expense of, let's say, 30,000 a month, saving 20,000 a month as well.
Yeah.
And at the end of the year, you will have 1.2 lakh saved. You would have spent a lot on yourself and you made 1 lakh more than the 5 lakh random reward. So I'd say these opportunities are good, but have a percentage where you want to use for this risky assets, which are SCL manufacturing.
Yeah.
20% of your investment capital can go into this,
Yeah.
and a percentage of your portfolio can always be spread into crypto, large cap, mid cap, small cap, mutual fund, FD, PPF, NPS, all of that, whatever you want. So FOMO kaise nahi aayega? I'd say try it out, try
Okay.
with less money, and if you lose money, अपने आप FOMO खत्म हो जाएगा. But if you make money, if you make money,
I get
uh,
you.
I hope that answers your question.
Yeah, 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 sure, sure, sure.
Uh, so this was the basics. I think we have moved a little ahead of our time. So today I'm going to stop with the basic psychology. We can move on to the trading strategies next week. I'll take another 5 minutes, to go on the indicator part, which I wanted to do. We have only been able to touch the introduction aspect today, and I'm okay with it, to be honest, because the foundation is more important than actually start to put real money and start to make money. Because it took me a lot of time. Mistakes I made was jump in too early and without proper guidance and knowledge. I still haven't had any coach, so most of my knowledge is self-taught. I've done 4 courses. I've read somewhere around 9 to 11 books, and given 3 years, 6 hours each day. Lost a fortune, 7 digits I've lost, 7 digits I've made.
My
And
God, 7-digit losses.
yeah, I've made 7 digit losses. I've made 7 digit profits, much ahead my break even now. I'm completely profitable and very consistent now for the past uh, few months.
Oh,
So
nice.
I just thought like a lot of people are suffering, a lot of people are losing money and giving up on this. Don't give up on this.
Mm.
This is the hardest way to make money. This
Yeah.
is the most gut wrenching way to make money. But if somebody who's able to control their emotions, able to give up on FOMO, is, they can make a lot of money on this and on a day-to-day basis. And you don't practically have to do a job if you're understanding the market, understanding the psychology. So I want to touch three things now. What are the indicators that you use to know that the market is in your direction, and how to use indicators to get good entry and exits and book your top profits? How to know the psychology of buyers and sellers, and the historic pivot points. I have touched upon the historic pivot points with the weekly chart, where, let's say, this price went up, came down again, price went up. So these are basically the pivot points. If I had just made a line at this price, you can notice that market came down here, went all the way up. Market can go up or anywhere, but there's always a chance that the market can do the same. Went up again, came back, went up again, came back. It's going to do the same thing. So this is one way of using your dynamic pivots, where you observe the price action and use the dynamic pivots to make money. Scalp. It's scalping. These are 5-minute candles, and in 1 hour you can make 1 year of your bank saving interest profits in 1 hour. So that's what I like. I scalp on a day-to-day basis, and I use these pivot points. Indicators would be some of the moving averages, these lines that you see, uh, support lines, low of the day, highest point of the previous day. These are all pivot points. In my next session, we'll be diving into, for a day trading strategy, what are the specific indicators to use. So if I give you a nutshell, I use moving averages, VWAP, which incorporates the volume, and SMA, simple moving averages, exponential moving averages, and that's all, which incorporates the last 1 month, 9 days of price action movements. So this one particular one here is an EMA, and you can see the price keeps touching it and bouncing off this. So this is a very good indicator for me to buy or sell. Another indicator I use is volume. So what volume does, it gives you an idea that the price is super, high in trade, and there are a lot of buyers and sellers that are active. The people who want to sell here are also buying here. That's why a lot of quantities are being traded here. So I use this volume as a relative scale. So this candle shows that at this particular candle and this price action, maximum amount of trades are happening. So if you see, the volume is higher relative to all other volumes. So, and the price has never touched this the same day. So highest volume is a very good indication of where the price can go. EMA is a good entry points. These pivot points, these dynamic pivot points that we create based on price action, are also very important for me for day trading. We will move on based on, different schools of trader, different types of trader, and what kind of strategies they take. So this was more of an introduction from my point. If I give you a recap, we've talked about buyers and sellers, why the candlesticks are the best and why I prefer those, the open and close of the candle and how to know where the candle and the price action is gone, different time frames and different schools of traders, investors, positional, swing, and day traders, and indicators. What I use for day trading, will dwell upon those next week again. Psychologies of buying and selling. So the buyer buys here, and this is not a seller getting active. This is profit booking. I mentioned earlier as well, profit booking, and then buyers are active again. Then profit booking, buyers are active. And then the buyers lost the stream and sellers got active quite a bit until buyers were active again. So it's hard to really predict, because there are investors, positional traders, option traders, future traders, hedge fund managers, and anybody randomly getting spooked out with a large quantity, just saying, I don't know what's happening, I'll just sell. So a lot of type of traders are there. How to get to know them, how to know the psychology of the market, which time is best for day trading: 11 a.m., 9 a.m., 1 a.m., 1 p.m. in the afternoon. All of that we will discuss in the next class. So I would leave it with an introduction of stock market, crypto, and general trading basics. And now I will open the floor to any questions that you have, or anything that I mentioned which you felt you couldn't understand, or if you have any other doubts in general.
So like I had one. It got cleared. So no more doubts today.
Right. Thank
Yes,
you.
same Anshul. So I had questions about like how to know that what who are in control, the buyers or the sellers. I think you said that we'll be covering that in the next session.
Right. I want to just set a base. We could have done that now, but I'm expecting more people to join in next time. And
Okay.
just start with these basics. And the way to FOMO, how to know buyers and sellers are active is just test the market, dip your feet a little in the cold
Any
water.
books that you want to recommend?
Sorry,
Any
Yeah.
books that you want to recommend?
any books that I want to recommend? Yes. So one of the books I'd recommend is Frank Ochoa's The Pivot Boss. So he talks
Okay.
about these dynamic pivots. Another one would be The Intelligent Investor by Benjamin, some Franklin guy. I forgot his name. There is a foreword
Okay.
by Warren Buffett. Is Warren Buffett's favorite book. So
Oh my
one
God.
would be from the investment perspective, and one would be from trading perspective. Get a both of these schools of thought combined, and I think you'll be on your way to be making consistent profits, even how little or big they are. Consistency is all that matters.
Yes. Yes.
So, guys, thank you so much for your time, and I do appreciate you taking out time on a weekend. And I hope I
Thank
was
you too. Okay.
Thanks, Anshul.
Thanks. Thanks.
great. I'll be uploading this video on YouTube and maybe sharing this with you later, so you can, maybe share with your family and friends and get the
Yeah.
subscribers to like and
Hmm.
join us in the next session as well.
Yeah.
Sure, Anshul.
Okay.
Sure.
Thank you.
Thank you so much.
Have a great day ahead.
This has been really informative.
I'm glad. I'm glad. This is the fuel for me to make more of these sessions happen.
Yeah,
I,
please do,
Yeah.
please do.
Please do,
This was
man.
very helpful, and I'll be going through it probably again because there was a lot of information for me to grasp, and as I am very new to this concept.
I'm glad.
So yeah, I'll be taking my time to go through this and probably study a little about it, and let's meet in the next session.
Sure. So I'll try to keep it same day, same time. So
Mhm.
consistency, happens for us. And
Yeah, that's the key.
then, hope to see you guys
Right.
then. Have a
Yeah,
great day.
sure.
Bye.
Yeah, you
Bye.
too.
Bye.
Thank
Bye.
you. Bye.
Bye.
Bye.